there's no replacements. It's just the law of physics. If with no selling, the original sellers turn buyers, the only way you're going to get new sellers in there is at a substantially higher price, not anything near current price. That's what makes the short position so dangerous, so manipulative. It's like, even if you want to get out of it, you got to get out of it. You got to buy back the positions, and if you buy back the positions, the price starts to soar, and it worsens your finance. These guys are already out between gold and silver, $7.5 billion. Okay, almost $1 billion a man on average, and they haven't even started to buy back and cover these short positions. If they put their mind to it and decide to buy back these short positions with or without the Justice Department's prodding, okay, all hell is going to break loose price-wise to the upside.
Welcome back to Liberty and Finance and Reluctant Preppers. We're always glad to have this famous returning guest. Ted Butler is one of the most sought-after analysts in the silver metal space. Today is Sunday, May 24th, 2020. Ted, thanks for joining us again.
Thank you, Donegan. I'll see if I can live up to that glowing intro.
Well, at least I can claim that as long as I've been aware of the silver market, you've been a preeminent analyst that many people have recommended to me, and we just are grateful for your presence here. We had you back on a couple months ago, and then a couple months before that, talking to us about developments in the silver market, specifically the COMEX, about concentrated short positions and JP Morgan. But before we get into that, could you bring us up to date on very recent revelations from the Department of Justice's investigation into allegations of illegal trading practices that were happening, and what's maybe intensifying about that investigation?
Sure. There was an article on Thursday on Reuters titled "Traders Beware," in which, and I wrote about it yesterday for subscribers. It's obviously a press leak by the Justice Department, designed to do something, which we'll discuss if you'd like. But basically, to alert and remind everybody how they are intensively investigating precious metals manipulation, prime target being JP Morgan, other banks being mentioned like Scotiabank and HSBC. What's kind of unusual about the article is that typically the U.S. government does not, and certainly the Justice Department does not even let you know or acknowledge that there's an investigation going on. No less, basically give you an appraisal of what they're up to. In this particular article, there was a number of officials that were quoted and describing basically how they're going about this investigation. They're hiring new attorneys, they're doing this, they're doing that. Anyway, the bottom line of the whole thing is that obviously this DOJ manipulation investigation is not going away. And in fact, you could probably assume that it is reaching some type of climax. They're not going to obviously back down without some kind of resolution. The question in my mind is still, is the Justice Department and the CFTC, are they going about this with their stated purpose, which is spoofing this very short-term manipulative trading technique that influences prices in a very short-term basis, or is there something more? I obviously have on the opinion that there's something more, and what the something more is basically surrounding the concentrated short position that has existed for the last several decades JP Morgan was basically the prime shorter up until recently. And is the Justice Department going after that and the fact that JP Morgan and the other big concentrated shorts have a perfect trading record? In other words, they've never lost over many decades of shorting silver or gold, only profits. And how can that be? And up until now, the Justice Department and the CFTC have basically sidestepped the issue in public. So the question becomes, are they sidestepping the short concentration issue in private in their investigations? Because if they are, then God help us all, because then they're basically, the Justice Department would be out to lunch. I don't think they are. I'm kind of thinking that they got to know what's going on, and they just don't want to necessarily lower the boom, drop the hammer, as it were, on JP Morgan and the other big shorts until they can line up and extract whatever it is that they're looking for.
Now, this idea of a leak, what gives us? You say the reason we think that this might be a leak is just because it's not characteristic for us to get access to information about an ongoing investigation.
Yeah, well, I mean, a little bit more than that. Common sense. This is not the kind of story that would be typically ferreted out by a reporter snooping around to see what's going on. There's featured direct quotes from a number of the officials, which is unusual, names and quotes to go with them. It was more like a PR piece than some kind of uncovering, investigating, reporting, and covering that the reporter did. I don't mean to take anything away from the reporter, because the facts were basically described accurately, but it's not the kind of thing that and it's not the only one. There's been a number of these articles recently reminding everybody that the Justice Department is still hot on the trail of precious metals manipulation, with JP Morgan firmly in their sights. This is not the only article, and how you would come up with this without the full acknowledgement and permission of the Justice Department is just too hard to conceive. Versus the Justice Department is getting out something it wants to get out.
Interesting. We've heard from a lot of different analysts about misdirection and the official story, the public-facing financial books versus not, of many different, whether it's the Fed or whether it's specific companies, and also the emphasis that is the permitted narrative to be public-facing can sometimes be controlled opposition just to keep critics at bay while a bigger plan is going on. It's interesting because we had heard some speculation back about the time that you broke this story to us about the DOJ's original charges against JP Morgan traders, that there was maybe it was you who spoke with us about it, that the start of the repo actions back in September of 19 may have been caused by JP Morgan flexing their muscle versus the influence that they could have on drying up the liquidity that's necessary for proper functioning of the interbank lending systems. So anyway, it just makes stories afoot. It might partially explain why we get this inexplicable, apparently intentional leaking of PR of we're still prosecuting, or we're still pursuing this story. Do you look at it that way, or do you look at it more like, no, this is just a progress report and it's something that we can be aware of as citizens?
I'm being inclined to think that it's more the version that it's intentional. What the full meaning behind it, I think it's, I don't know exactly tit for tat, but when the first charges were announced back on September 16th, charges of manipulation against the three traders, the Justice Department made a big deal about it. It was a dog and pony show and a big press conference, and it was not done quietly. It was a Monday morning. It was like, the press was alerted. It was a live event, etc. that same day is when the repo stuff started to develop, and I alleged, and it just seemed to me that it was JP Morgan, fighting back, against the Justice Department, and JP Morgan is a formidable competitor of anybody, and particularly the Justice Department. Certainly JP Morgan's lawyers are better paid, and there's more of them than are at the Justice Department. But aside from that, it seems to be a rolling tit-for-tat kind of thing. In this case, it strikes me as just the title of the article, Traders Beware. It's a shot by the Justice Department against the bow of J.P. Morgan, and it's going to lead to something. Now, whether J.P. Morgan is going to lash out again, I mean, who knows? But I think that it's more of a case. The example I used is it's like the Justice Department is bombarding, the beach with the heavy artillery before the troops come ashore in the invasion. Now, what the timing may be, is anybody's guess. Whether it's designed to force some kind of settlement on the part of J.P. Morgan also remains to be seen. But it fits within that parameter. This is a very, strategic move, I believe, by the Justice Department. They just weren't twiddling their thumbs or just had nothing better to do. If they didn't want this article to be out, we wouldn't have been out, period.
Mm-hmm, mm-hmm. I guess the part about me that tends to be maybe looking at this from a more skeptical side is when we've talked over the years about the immense scope and scale of what's been allowed to proceed on the large exchanges. It just seems that the story, the official, for example, the indictment of the small number of traders initially, it seems so much looking like when the big fish get ignored and the little fish get publicly pilloried, just as window dressing. Hopefully this is more than that. It's just there's been so many years of sort of that double standard injustice that people are understandably a bit jaded from thinking that there's really a different set of rules that applies to the really huge players versus the small fish that kind of take the fall.
Yeah, no, I can understand that skepticism, and that I would, you're thinking of it straight. Looking, reading between the lines, though, on some of these recent press leaks, is that they do seem, the last couple of articles, there was one a month or two on Bloomberg, and along with this one on Reuters, they seem to be shifting the targets from the individual traders to the bank itself. That's coming out very clearly in this article and in the former one from Bloomberg, that there's a shifting of away from the little guys to the bank itself. Now, whether this is materialized and whether it's fulfilled, it remains to be seen. But this is a lot of preamble that we're going through before we see what the Justice Department and the CFTC, are basically up to. If it's just spoofing, if it's just this short-term trading, then it was all basically a waste of time, because that's like surface and topical, and that's not worth the aggravation. Yeah, it's wrong, and slap them with fines and all this kind of stuff. But there's a world of difference between spoofing, which I maintain is just one of the many tools in the dirty toolbox of these crooked banks, which has been used to help foster their control and domination and suppression, manipulation of silver and gold through this incredibly large and concentrated short position, which no one can explain. There's no legitimate reason that I've been able to uncover, and I ask the question constantly and openly, why would 8 just 8 traders, mostly banks, okay, be so heavily short in silver in particular, gold as well, but so heavily short silver, half a year's 50% of annual production, hundreds of millions of, close to 400 million ounces of silver, 8 traders are short. And prices that have been so low until very recently and are still low. What's the economic justification? That's not legitimate hedging. It's not somebody protecting themselves. The only logical answer you can come up with for why someone be so few traders would be so heavily short silver would be for the purpose of price suppression. And if there is another answer, if there is a legitimate explanation as to why such a large short position would exist, why isn't it forthcoming? I mean, certainly the Justice Department should either explain it along with the CFTC or end it if it's a illegitimate practice, which I allege, one or the other. But just that nobody has come up with a good, bona fide, legitimate reason as to why so few number of traders would be so heavily short. Concentration is the hallmark of manipulation. That's why the CFTC maintains concentration data, because it's the frontline defense against manipulation. You can't have a manipulation without a concentrated position, either on the long side or on the short side. In the case of silver, the concentrated position is most egregious on the short side, and therefore it should be answered as to why it exists, and yet no one comes up with an answer. I give my kingdom for a legitimate answer, but it's not forthcoming. And if it's not forthcoming, the answer, a legitimate answer why these guys are so heavily short, well, then prosecute them and make them stop. And that's the whole point.
We recently had a discussion about Scotiabank getting out of the metals business entirely, and how it appears almost like rats leaving a sinking ship. If the jig is up in the precious metals manipulation market, does that square with other signs and symptoms of the time that we're seeing?
Yeah, I would say so. I mean, Scotiabank has been trying to get rid of their precious metals unit, Makata, for years. They tried to sell it first and couldn't get any legitimate bidders. And now it's decided apparently to close down in lieu of selling it. Look, they won off the short side. It kind of shows you, and Scotiabank was always and still may be a one of these big 8 shorts. Certainly they have been in the past. Whether they are now, it still is open to question, but it kind of shows you that who would want to come into this business and be on the short side of silver. It's no real wonder that there appears to be the rats are leaving the ship, but more important than that, there's no ready replacements. Who would want to come in and be massively short silver at current prices? It's like, what's the purpose? There's no obvious benefit, and it looks like all risk. And for that reason, I claim that the 8 big shorts who are short this market don't want to be short. It's just that you can't, click your ruby slippers and blink your eyes and presto changeo, the short position disappears. It's an open, active position, and the way you close it out is you either buy it back, okay, or you deliver physical material against it. The fact that they haven't been able to do either, that suggests that they're in a deer in the headlights. How do you get out of this thing? If they go to buy back these positions, it's going to send the price soaring, because these 8 big shorts have been the short sellers of last resort for the last several decades. And if they decide to abandon the short side, as Scotiabank appears to be trying to do, there's no replacements. It's just the law of physics. If with no selling, the original sellers turn buyers, the only way you're going to get new sellers in there is at a substantially higher price, not anything near current price. That's what makes the short position so dangerous, so manipulative. It's like, even if you want to get out of it, you got to get out of it. You got to buy back the positions, and if you buy back the positions, the price starts to soar, and it worsens your finance. These guys are already out between gold and silver, $7.5 billion. Okay, almost $1 billion a man on average, and they haven't even started to buy back and cover these short positions. If they put their mind to it and decide to buy back these short positions with or without the Justice Department's prodding, okay, all hell is going to break loose price-wise to the upside.
So that was the theme that you talked to us about two visits ago, when you talked to us about silver shorts being in a bind. Then at our last visit, if we could turn our attention to JP Morgan specifically, you talked about how perhaps they have, in fact, managed to reposition themselves towards the long side. Do we know any more now than we did then about how that's developing?
Well, it's still the same. The difference is back, I think our last interview was back around April the 6th. And at that time, JP Morgan was basically flat. They didn't have a short position. They used to be the dominant short seller, the biggest short seller, for 10 years running, since they took over Bear Stearns. And as of a year or so ago, they started to whittle the position down, and as of April 6th, they weren't short, and they're basically still not short now. It hasn't changed that much, the overall position. Prices have started to come up. I mean, I don't mention that because it necessarily proves anything, but we were around the $14.50 mark or so back on April 6th. So we're about $3 higher or so in silver. And in gold, we were, around the low 1600 mark. We're, $100 higher there. I don't use that as proof that there's anything been dramatic going on since then. However, it's amazing that we've come up in price and there hasn't been a material change in the market structure. Certainly JP Morgan's position hasn't changed much, and the big shorts positions haven't changed. It's gone against them by that amount, and I still think the fact that we're higher in price now and we still have this same market structure configuration, mainly JP Morgan not being short, which is very unusual, and the big shorts apparently still stuck in the short position and several $1 billion worse off as a result of the price moving up, since April 6th. Just puts more pressure on them. And certainly the question still lingers, why are these guys short? Is there any legitimate reason for it? And I haven't heard that, and so now it's against them even more, and they haven't done anything about it. The position still exists. So I'd say it's, all systems go for higher prices, and will, accelerate to the upside if, as, and when these big shorts meaningfully start to try and buy back their short positions.
We've got some questions that have been submitted by viewers during this interview, and Rob Rage asks, he says, Jim Sinclair and Jim Rickards said that to balance our money supply backed with gold, it would have to be valued at between $50,000 to $87,000 per ounce. What's your opinion?
Well, that's not my area. Just because the money supply and the supply of credit in the United States or throughout the world goes up, I'm not. I can see where it would foster higher gold or commodity prices in general. I don't know if there's a specific formula for every $1 trillion increase in the money supply or the debt figures should translate into precise increase in the price of gold or any other commodity. That's above my pay grade. I say it fosters. I could see the more debt and money creation you have, it would tend to make people want to buy metals more. I think if you're looking for specific mechanics of what drives gold and silver prices, I still think that the main input is the net positioning on the COMEX. That's the most direct effect on gold and silver prices. I don't know enough about the other stuff to comment on it.
We have a question about one of the world's largest silver miners, KGHM. Lucas Gorzicki asks, could you please ask Ted of his outlook on KGHM, the second biggest silver producer in the world, safe jurisdiction, emerging market, strong currency? Any thoughts on either that or other silver miners?
Well, look, all I would say is if you're a producer of silver, and the Polish company is certainly one of the very largest silver producers, and the price of silver goes anywhere near what I think it's going to do when this whole COMEX, Department of Justice, concentrated short position gets resolved and prices go higher. Generally, miners are leveraged to the price of silver, and it can't be bad that if the price of silver takes off, it can't be bad for any silver miner. So you just I wouldn't comment specifically on any one company, but how could a mining company not do much better when their principal product takes off to the upside in price? That's like shooting fish in a barrel.
Mm-hmm. This gets back to what we were talking about earlier, but maybe it has to do more with the outlook on whether there will be justice served. Without Excuse 2011 says, Ted, if we give a gang of criminals an unlimited printing press and have no law that restrains them, under those conditions, is it even possible for silver or gold to reach a true price? If so, how?
Well, that's the question in balance. Will there be an adequate resolution to what is increasingly becoming more obvious to people? There's this manipulation that exists on the COMEX. Again, I'm harping on this concentrated short position because I want to get as specific as possible. But there has been a sea change when you think about it, whereas in the past, the regulators, including the Department of Justice, took a hands-off approach, to any suggestion that the gold and silver might be manipulated in price, and basically kind of look down their nose at it. Now we're at the position where they're leaking press releases to stories to the press that they're on the hunt for precious metals manipulation. They got their eyes on JP. So it's evolved kind of obviously slowly, too slowly. I think it should have been done a long time ago, but I guess better late than never. There is a determined effort on the part of the Justice Department to look at this, and that in and of itself is a sea change from what things have been like in the past. We're not ready for it. Look, I'm like you and many others, there's a degree of skepticism, and I hold it too. Are these people at the Justice Department really going to follow through? But at least there's a chance of that happening now. Whereas in the past, they never acknowledged. You'd never hear the words precious metals manipulation coming from the Justice Department, and my God, they're making press release, leaking to the press that their progress on their own investigation. So you gotta, try and put things into proper perspective.
We've got a question that we can generalize on from Francis Wood is very specific here, but I think it's a general principle we can work with. He says, when the dollar goes to zero, what's an ounce of silver worth? I'm thinking 7 gallons of 93 octane gasoline, a dozen eggs, and a 12-pack. So that's very specific. But just what have we seen in history when current fiat currencies have collapsed about how silver in particular, or precious metals in general, have played a role in the days and months that follow that?
Well, I mean, by definition, if people are running out of a currency because they don't want to hold it, and I've lived through that. I don't think most of your readers would have been through that in the United States unless they, were active adults during the 1970s when we had a pretty good burst of inflation, where people, there's a mindset that you don't want to hold currency, you want to spend it as fast as you get it, okay? Because prices are only going to go higher, not just of silver or gold, but of everything. I don't know. We're not in that environment now. If anything, with the conditions that exist today, people are pulling in their horns. They're not rushing out to buy things to get rid of money. They're controlling their spending, and if anything, they're saving more if they're able. So I don't know if we have that particular thing, and the whole concept of a dollar going to zero. It very well may go to zero, but not anytime soon. That's the measure of inflation. It's all paper currencies ultimately go to zero, but they don't go there that quickly. I mean, it can happen. It's happened in other countries, not so much in the United States. But it's a different topic. Completely. I wouldn't worry about. Most people have a problem with not having enough dollars rather than wanting to get rid of them as quickly as possible, if that's any answer.
Sure. In terms of the lasting store of value of precious metals, though, what in your considerable research that you've done have you gained as far as people wanting a place to make sure that they are protecting themselves, if they have any retirement savings, if they have any cash savings that they would otherwise be having sitting in a bank account or whatever? What role can or should or does precious metals have proven itself to be able to play in that?
Well, that's a good point, because look, every action that the government seems to be taking in order to meet the current crisis with the coronavirus and the shut off of the economy seems to be to make it harder for people who are looking to invest or have some kind of decent interest rate return on their money. There's kind of, you're forced, basically to go out and, use the money that you'd normally would like to keep in the bank or in treasury bills or whatever, and you're forced to seek out other investments of all type, and certainly gold and silver, would qualify. Superimposed on that, the government seemed to be working overtime to force people to invest and spend their money away from just leaving it at interest. You got this incredible, to my mind, manipulation on silver in particular, gold too, but gold has gone up over the last year or so, a good amount, whereas silver hasn't, just starting to perhaps. But you got this combination where the government's kind of forcing you to get into other kind of alternative investments, and at the same time, you got this incredible situation in silver where it's been artificially depressed for so long and maybe about to be set free. And I don't know if you could get a better combination than that, if somebody was looking to protect hard-earned savings and to set them aside for another day and another time. What would be the best thing to do? Would you rather own, silver, or would you rather just, leave the money at no interest for the next, 5 or 10 years? Sounds like kind of a no-brainer to me, but I don't want to make it too simple.
Well, for people who want to follow your work where you keep it from being too simple, but give them a lot of the background and the details and the perspectives behind that, where can they find your work?
Oh, sure. It's at Google search butlerresearch.com. It's I think we're about to start our 11th year as a standalone service, and you can try it for a month or so, see if you like it. You might get some good stuff out of it. So butlerresearch.com.
Thank you, Ted. We've been speaking with Ted Butler, legendary silver analyst and founder of butlerresearch.com, this Sunday, May 24th, 2020. Ted, thanks for joining us.
Thank you, Donnie.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.